Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here on Monday, the 4th of April, 2024. Well, President Biden's out buying votes again. I had just heard that he was in Madison, and tonight I know he's in Chicago because I have a good friend, and I got a phone call that in the building, the Secret Service is all over their building right now as he's going to have dinner there tonight. It's a who's who's building in Chicago, so it'll be interesting for those people that are there. I had the pleasure when I lived downtown in that area. I live now in a different part of the city, but downtown. Donald Rumsfeld, the old Secretary of State, lived exactly above me. He and I were pretty good friends, and I used to have to deal with the Secret Service as I was the president of the building when I was a younger man there. And I loved being with him. He's very smart, nice guy. He's no longer with us, but I enjoyed talking to him a lot. He'd come down for a drink, and we would sit there around the table. You know, you're sitting there, Secretary of State, and you're having drinks. Strange. Okay, so as you look at the marketplace right now, got to understand that we're buying time until Wednesday's CPI, Thursday's European Central Bank meeting, where it's widely expected the bank will set us up for a June rate cut, and then Friday's PPI numbers. So this is an important week. You're going to get a lot of data. It'll start with the markets evening themselves up, as I think we're getting in the dollar right now. And if you noticed, you were very sideways today in the stock indices. When the markets will start anticipating what they want will be again late in the day tomorrow, so be ready for that. On the energy markets, at the end of the week, you saw a lot of buying as traders were very fearful that Iran might attack Israel, possibly the United States, do something to oil shipments. Well, nothing happened. Israel and Hamas met again today. The talks broke down again today. I understand that in 48 hours they're supposed to meet on Wednesday and have another discussion. But I think both sides have to come to a realization as to if they want a truce, what's reality for it. Okay, neither's going to get exactly what they want. And world pressure is certainly building on Israel with 33,000 claimed people dead that, if they're going into Rafah, they can't start killing thousands of people again. And I was looking at today videos in different ways, by the way, because I look all over the world as I'm on the internet. And as people are going back to some of these cities that Israel's allowing them to go to, there's nothing there. When I tell you there's nothing there, there's nothing there. These are like a Terminator movie where you just see shells of buildings that are there. So what are they going home to is the big question. Who's going to rebuild all that becomes the second question. The UN is taking up the story of the Palestinian Authority. A vote was held today. It took a minute, and now it's going to other councils. I don't know if it'll go anywhere, but that's the idea, to recognize Palestine. And obviously that's going to be a huge fight between, Fatah and Hamas, because the two are different polar areas here. So we will see just what happens. Those are just things on that center. But again, the CPI, PPI, that's what we have to start thinking about. And at the end of the week, it sounds crazy. We have bank earnings. So we just finished an earnings season. There's always stragglers at the end of one season. And now we get the earnings for the first quarter. Given how the stock market performed and all, I'm not looking for declines. It could happen, but this market's been on fire, and, the economy's been on fire, so we'll see. When you look at the S&P, we had a bit of a, as you can see, drift off on the weekly basis. That's about all that I could say about it. It shows itself a lot more when you go to a bar chart instead of going to a chart of just closing prices. There are different ways of looking at the market. And here you're in a distribution pattern. That means that the market has suddenly gone into a pattern of lower highs and lower lows. So it broke that big pattern of this rally that we had, and now you're marking time again. Now, if you don't use the swing line, you often don't see what this is, but we do have it. My new charting course is on the website under education. I'll be talking about it on Wednesday, not yet. Lower highs, lower lows, you're stuck at the 18-day average. This is about as neutral a chart as I know how to look at. The market peaked out, and it has been peaking out against Bollinger Bands, which are successively higher. Then we seem to pull down to the 18-day average and fight a battle. And in all fairness, this market hasn't had one of these moves under that 18-day average all the way since back here at January of this year. So this is the first sign of the market saying, oh, I'm a little bit tired. What do we do right there? And momentum, which was overbought, no longer is. When we take a look at the NASDAQ, it's a similar package, but not the same. Number one, it's not trending down. You got a higher high and a lower low. It's more or less caught in the sideways action of the upper Bollinger Band to the lower band, and then using the 18-day average as a staging. Trying it up, it doesn't go. Trying it down, it doesn't go. And the market sort of whipping the traders in between there. The June mini Dow is more like the S&P. Lower highs, lower lows, a downtrend, found its support right here. And again, the resistance of the upper Bollinger Bands showing itself. The trend is down, but this market is oversold. And when you come to the Russell, the trend is down, but you're just sitting at the 18-day average going, okay, what do I do next? The CPI will probably set up that story as to what the next thing is. As for the bonds and notes, when I'm looking at them, I just don't see anything at this point that's going to break interest rates. And that becomes a problem. Now, the market has, for whatever reason, decided that between here, let's call it the 4.25 to the 4.5 level, in the 10-year note seems to be the neutral area. Yes, it's a bit to the bear side. Don't get me wrong. It's a downtrend, but not a collapse yet for the stock market. It's not too much pressure on interest rates to destroy the pricing power of corporations, to stop them from borrowing and ideally making profits, which this earnings season will give us an idea about. But as I'm looking at what we have right there, there's certainly nothing bullish here. All you could say is you're oversold and into the support of the Bollinger Bands, but the trend is clearly down, and the 5-year is doing the exact same thing. So trends down, higher rates in both of those still there. In the dollar index, we've gone into a stall, which makes sense in front of the CPI. Lower low, higher high. You lost the bullish embedded reading. When that occurs, before you go up and take out the most recent high, it's not uncommon for prices to try to get back to the closest main moving average, often the 18-day, to stall itself out, and that's what I think it's doing. And you've certainly been doing that with this rally that we've had in the euro, and you're fighting right there. I, for one, want to see what Ms. Lagarde's going to say on Thursday before I'd want to put money at work in this market. In the British pound, we have higher lows, higher highs, fighting a lot at the 18-day average of closes. In Bitcoin, higher lows, higher highs, again, fighting at the 18-day average of closes. And I'm sorry, at the upper Bollinger Band here. Did I say 18-day average? Yeah, I was right in saying it there. I got carried away. So, fighting there, but bullish. And the break today was interesting, but you're back to overbought condition right now. When we look at the Brent versus the WTI, you had gotten up over the $5 difference, sold off a little bit, 12 cents today. I don't see any problem with that. It still looks good overall. And as you can see, the energies have bullish embedded readings. I think they're still getting bought on the breaks in the market. Will the CPI scare it off? Doesn't have to. I think the world geopolitical situation is what's driving this market and is driving it to the upside. In the gasoline, you lost the bullish embedded reading. I think you're going to get closer to the 270 area and fight a battle there in the June gasoline. Natural gas, I've told you, I think that this whole area is going to give you a bounce, and you're in it. Now, what it does from the slow stochastics right here, well, first right there is they're coming up and they're not overbought, but the Bollinger Bands with the tight band is going to be the real important thing. It's winding itself up. Is this going to prove to be another top and take us down maybe to the 150? Or is this going to prove to be a base in the market, and maybe it's a long-term base that the market has to develop to say that it's through on the downside, maybe it's not ready to go on the upside, but maybe the down is over. Got to consider all that when you're looking. But what I'm showing you are so much in the way of technical indicators. And we have for you a simple piece. They're PDFs we put together with our friends at Modern Trader. And it's volumes 1 and 2. So it's price charts. It's all the different oscillators that you've got. How do you draw the trend lines? How do you use moving averages? And which ones? Exponential, simple, weighted. There's many different types that are out there. What do spreads tell you about a market? Then cycle ideas. And the Arun indicator, price time. Elliott wave principles for those of you with an options primer, because not everybody wakes up and knows what an option is, and most people lose trading options. They don't understand deltas, gammas, they don't know how much premium they're paying. They just go, oh, I'm long that option, and maybe in order for it to get into the money, they bought something so expensive or so far out of the money, there's no chance. So this gives you some ideas. IraEpstein.com, free offers is where it's at. Move your cursor up to the top. You'll see a cursor there, an icon rather, and just give that a click. It'll take you there. And again, IraEpstein.com, free offers, and choose the other ones while you're there that you might have an interest in. I'm Ira. I am looking shortly to do some special reports. I'll probably do one on Wednesday when the CPI comes out. You take care.